SCHG, QQM, and VUG are three of the most popular choices on the market when it comes to growth ETFs. And in today's video, we're going to break down and compare these three ETFs to see which one comes out on top as the best. Let's not waste any more time and get straight to it. Strategy and objectives. First, I want to talk about the strategy and objectives of these ETFs so you understand them better. Starting off with SCHG, which is the Schwab US Large Cap Growth ETF. The goal of SCHG is to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Large Cap Growth Total Stock Market Index. And the selection criteria for this index is based on 6 measures: 2 projected, 2 current, and 2 historical. This includes projected price to earnings ratio and projected earnings growth, price to book ratio, dividend yield, trailing revenue growth, and trailing earnings growth. The second is VUG, which is the Vanguard Growth Index Fund ETF. This fund seeks to track the performance of the CRSP US Large Cap Growth Index. And when it comes to the criteria for this fund, it considers 6 factors, which are future long-term growth in earnings per share, expected short-term growth in EPS, 3-year historical growth in EPS, 3-year historical growth in sales per share, current investment to assets ratio, and last return on assets. And for the last ETF, we have QQQM, the Invesco NASDAQ 100 ETF. QQQM is for investors that are seeking exposure to the US large cap growth stocks in the NASDAQ 100 index, which is an index that includes the largest 100 non-financial companies that are listed on the NASDAQ. When it comes to the criteria for the fund, there are requirements such as companies must be listed exclusively with the NASDAQ stock market, a minimum average daily trading volume of 200,000 shares, they must be classified as a non-financial company, and they must have a minimum free float of at least 10%, meaning at least 10% of the outstanding shares of a company are available to be publicly traded and are not restricted. Also, important note here, later on in this video, you'll see that sometimes I'll be using data referencing QQQ instead of QQQM, and that's just because QQQM has only been around for a few years. And these two ETFs are almost exactly the same, which may have you wondering, well, which one is the better one to choose? And just to give you a quick rundown, the difference between the two is that QQQM has a slightly lower expense ratio compared to QQQ. QQQ also has much more trading volume and liquidity, making spreads more favorable, and asking prices will be closer to the market price than for QQQM. For a long-term investor, the expense ratio is what really matters here, and for that reason, QQQM is the better pick. But now that we have an idea of what these ETFs are and the strategies behind them, let's get into the good stuff and see how these growth ETFs compare. Section 1, Diversification. First up for comparison, we have diversification. And by that I mean the holdings and the sectors that make up these ETFs. Starting with SCHG, this fund has a total of 229 holdings, with its top holdings in companies like Apple, Nvidia, Microsoft, Amazon, Meta, Broadcom, and a few others you'd recognize. And when it comes to sectors, you can see right away that this fund is primarily exposed to technology, followed by communication, consumer cyclical, healthcare, financials, and a few others. As for VUG, this fund contains 180 holdings, so a bit less than what we saw with SCHG. And it has its top holdings in Apple, Microsoft, Nvidia, Amazon, Meta, and Google. These are similar top holdings that are found in SCHG, but take note, VUG holds larger percentages of these stocks. Getting into the sectors for this fund, you have technology coming up on top, consumer cyclical, communication, financials, and healthcare. It's not a huge difference, but you can see VUG isn't spread as well as SCHG, since it carries a bit more weight in some of its top sectors. Next we have QQQM, and this ETF only has 103 holdings, so much less than the others. And its top holdings are similar to the other ETFs, with companies like Apple, Nvidia, Microsoft, Broadcom, Costco, and Netflix, with exposure to sectors like tech, communication services, consumer discretionary, consumer staples, and industrials. So getting into the ratings, I'm going to rate these ETFs on a point scale from 1 being the lowest and 3 being the highest. With that being said, when it comes to diversification, QQQM comes in last with 1 point. Although it comes pretty close when you talk about the spread for sector exposure between VUG and QQQM, the difference maker here is the total holdings of QQQM being 103, while VUG has 180. And with that, VUG comes in second and SCHG comes in first, as not only does it hold more stocks, but it has a much better range of exposure to other sectors and overall offers more diversification. Next, let's talk about risk. It's good to keep in mind while growth ETFs can be very rewarding, the reality is they have quite a bit of volatility and they expose you to more risk. There are a few points we're going to compare when we talk about risk for these ETFs, but before that, there's a measurement called beta that I want you to understand. Beta is just a measure of the risk or volatility of an investment compared to the market as a whole, which in our case is the S&P 500, which is essentially the market standard. And the beta for the S&P 500 is 1, so anything with the beta below 1 is going to be less volatile and likely less risky, and anything with a beta above 1 is going to be more volatile and carry more risk. Jumping into the first point, beta, looking over the last 10 years, SCHG's beta is 1.09. VUG has a beta of 1.1, and then QQM's beta for the last 10 years is 1.11. So VUG just barely comes out over QQQM, with SCHG on top as far as being a little less volatile. The next points to consider for risk are going to be the ETF's percentage of assets that they have in their top 10 holdings, turnover percent, which is a metric to show how frequently assets are bought and sold in the fund, and last is the 5-year tracking error, which just represents the difference between the ETF's returns and the returns of the index that it copies or tracks. For percentage of assets in the top holdings, SCHG has 55%, VUG has 60%, and QQQM has 50%. All of these funds are top heavy, but VUG definitely stands out here as the highest. For turnover percentage, SCHG has 3%, VUG came in with 5%, and QQQ with 8%. And for the 5-year tracking error, SCHG has 7.4%, VUG has 7.3%, and QQQM, which I use QQQ data for, has around 8.5%. All in all, you can see that these funds don't veer too far from each other when it comes to some of these metrics. But given the results, VUG came in third here. While it did land in the middle as far as the 10-year beta goes, having 60% of its holdings in the top 10 stocks is what really drew it down here. And second, QQQM takes this place while it has the highest beta, although not by much. Turnover is relatively good for all these funds, even though QQQM was the highest, as well for the 5-year tracking error. And the best for last here is SCHG, which had the lowest beta, and it came out on top on just about all the other metrics. Section 3, expense ratio, which is the management fees that you pay every year for holding a fund. SCHG has an expense ratio of 0.04%, meaning you'd be paying $4 in fees for every $10,000 invested. VUG also comes in with the same low expense ratio of 0.04%, and then QQQM has an expense ratio of a little bit higher of 0.15%, which would be $15 for every $10,000 that you have invested. Although QQQM has a higher expense ratio, in the grand scheme of things, it's still low for a growth ETF. And while all these are still great picks cost-wise, we have to rank the best. I think it's fair to say QQQM here is going to take 1 point in third. And since there isn't a second place because VUG and SCHG both have 0.04% expense ratios, I'm going to be giving them both 3 points for a tie in first place. The next category, one of the most important, is performance. So we're going to be taking a look at the past performance and the share price appreciation of these ETFs. SCHG has had annual returns of around 17% over the last 10 years, meaning if you had invested $10,000 10 years ago, your investment would now be worth around $45,000. VUG has had an annual return of around 16% over the last 10 years, while QQQ has had an average annual return of 19%. That'd be over $50,000 from a $10,000 investment 10 years ago. And keep in mind, I use QQQ data here since QQQM has only been around since 2020, so only a few years like I mentioned earlier. To give you a better idea on how these ETFs stacked up against each other over the past few years, let's take a look at some charts. If we look over the last 10 years, we can see that QQQ had definitely outpaced SCHG and VUG by quite a large margin. Although in the last 5 years, we see this gap is a lot closer between SCHG and QQQ, with VUG trailing behind some. But looking at the performance of the last 3 years and even the past year, we can see that SCHG managed to edge over QQQ in terms of returns by a nice percentage, while even VUG edged over it some. This additional diversification and more balance that SCHG offers seems like it's playing to its advantage in more recent times. With that being said, when it comes to returns, I'm gonna have to give third place to VUG, but over the most recent years, it has managed to be very close to the returns of QQQ. And second, and a very close second, is going to be SCHG. Even more so than VUG over the last few years, SCHG has performed very well, if not better than QQQM. And while QQQM will have to take first here, I think that looking over the medium term with SCHG, you're likely to see close or identical results, or it might edge out over QQQM if tech is taking a hit. But over the long term, I think QQQM will still have the lead here due to the strategy of the index. But remember, past performance is no guarantee of future results. Now that we've gone through all the categories, let's see how these ETFs stacked up against each other. After adding up all the scores, we have VUG coming in third with 6 points, QQQM in a very close second with 9 points, and taking the win here with 11 points is the Charles Schwab Growth Fund, SCHG. So if I could pick only one growth ETF out of all three of these to buy, I'd be leaning towards SCHG. But the reality is all three of these ETFs are solid choices, and if you're looking for an ETF for the growth portion of your ETF portfolio, it's hard to go wrong with any of these. To be honest, I own both SCHG and QQQM, essentially splitting the allocation here. And while there is of course overlap in these two holdings, I like having them both in my portfolio. But that's just me. Get what works for you and your portfolio, as well as what you're comfortable with. And if you want to build a stronger ETF portfolio by incorporating some dividend ETFs for more stability and some passive income, be sure to check out this video here. Thanks as always for watching, and I'll catch you on the next one.